Hi guys, it's CryptoBirb, Adrian speaking. Welcome to today's Friday webinar. Today is a little bit of a different configuration, but what doesn't change is the volatility in the market. However, we know it tends to fluctuate, and it tends to fluctuate as much as correlation. And the correlation right now between Bitcoin and stocks is very strong and apparent. And that's exactly what we are coming to cover and focus on today, how Bitcoin may actually print early reversal signs, provided that we see them first in the stock market. If you guys are ready to hear more and learn, make sure to stay tuned. We are going there right in a second. How you guys are doing? Please let me know if everything is fine. Hey, Baseball. Hey, Hossein. Thanks, Burbsman, for the live coming. Yes, indeed, you are very welcome, more than welcome. Super excited to see you guys. A lot's been cooking recently. Please let me know how you guys are doing, how you guys are feeling today. I had some technical issues before the show. Right before the show, the camera kind of like setup is not really working. I don't know. There was a note on the StreamYard that there was some outages. You know, in Brazil, there are some outages in other parts of the world. So perhaps it has to do something with that. However, I'm here and I couldn't be more excited to get you guys some good knowledge. And that's exactly it, what we are going to get you guys today. So please let me know again in the comments how you guys are doing. What's the weather up like in today? It's pretty sunny here where I am, and put in pretty good time to actually get the show started. So if you will, I'm actually having a couple of good insights for you guys to consider to give in terms of what Bitcoin may be doing. And well, let's kick it off. I do suggest with a little bit of the news, right? And the very news is that, well, there are some changes in terms of potential monetary economic situation, right? In terms of even more tightening. And if we are to check for the recession, right? Let's type in the recession in, in the Twitter. Let's see what we come up, right? What we have, the Bullard from Zero Hedge, you know, the Bullard is saying, I'm skeptical that the US will actually slide into recession, right? Well, what I've learned so far, you know, is among the politicians, is usually you kind of like want to take their words a little bit, first of all, with a grain of salt, and second of all, more often than not, inversely. When they say everything is controlled, nothing is in control. When they say the COVID cases were in control, they were not in control. When they say, you know, when they say there is not going to be a recession, well, I'm probably, you know, this guy that would say that it's more likely that we're actually heading into proper recession. And there are a couple of reasons for it, which I had mentioned throughout the previous shows so far. And well, first of all, we are talking about inflation, which is galloping. You know, 9.1% is almost a double-digit inflation, highest in about 40 years, if I'm not mistaken. This is quite an exception. And there are a couple of reasons for it. Mainly because the recession is dependent on the previously accelerated inflation, which causes the Fed to act, you know, upon tightening, right? Reducing the balance sheet, selling off the government bonds, pushing the prices, pulling the price of bonds lower, at the same time increasing the interest rates, causing the rate hiking cycle, if you will. So there are a couple of reasons as well to talk about a recession coming, right? Mainly because of inverted yield curve. And I had mentioned that several times, you know, in the past, inverted yield curve. Let's type it in. Let's use the search engine. And well, the inverted yield curve actually first time appeared, you know, in April, right? April the 3rd is what we were seeing, you know, the inverted yield curve, which was 10-year Treasury T-notes minus 2-year constant maturity bills, you know, and we are talking about a situation where the shorter term rates yields are paying more than the longer term ones, right? And we did not only get this one instance, but actually we got to see more. So if we take it then and combine it with the galloping inflation, which is not really slowing, right? And this galloping inflation causes a lot of risks, a lot of, I would argue, overheating to the economy, and after every single expansion that is eventually going to overheat an economic stage, the business cycle is about to lean downwards. It's about to go through an inflection point, which I truly believe we may be in right now. So regardless how we look at it, I would argue that we might be heading into a proper recession, right? And I would argue there is this, there is this over change that many politicians may be trying to implement in terms of getting the rate hiking cycle more aggressive. If you see that inflation is not coming off, they may need to go more aggressive, right? If they see the inflation is not coming off per the CPI prints, PPI prints, which right now in many countries are double digit. In the US, it's 9.1% yearly kind of like compound as an annualized inflation year over year, June 2021 versus June 2022, right? And the inflation is not coming off. More rate hiking pressures are to be expected. More hawkish monetary policy is to be expected. And some people would argue that the FOMC meeting that is coming up later this month potentially may bring even 100 basis points rate hikes, right? Let's actually give it a look, okay? We know this countdown, countdown so from the CME Group, Chicago Mercantile Exchange, for the target rate, which is after the rate hike, in the FOMC probabilities for 27th July after the Fed FOMC meeting, and there's 225, 250, okay, 70, almost 70%, 69.1%, okay, of probabilities based on the votes collected, and other tools that are used to actually combine and spit out the result. 69.1% chances for target rate 225, 250, and 30.9% of 250, 275. Okay, this is quite sharp, and this is actually, I would argue, a little bit aggressive, which may actually see and cause a little bit of more downside potential, right? So hoping and trusting, the markets are already kind of like overextended to the downside. We may face some bear market rally though at one point. So if we are to take it to the charts, which I'm going to do right now, we kick it off with the market summary, and the market summary basically tells you that, again, we are looking at a little bit of more positive kind of like a bar, the bar today, as in the 31,000 points on the industrial average, Dow Jones Industrials. Basically, the bar cutting through the 20-day average, which is the green mean, the short-term average. This represents the short-term moving average. And you're looking then at 50-day moving average, which represents the medium-term trend, and the final 200-day average, which is corresponding with the long-term directions, right? So you can tell there's a little bit of this confluence, congregation, this congestion between the levels. 31,000, 31,500, is a little bit close on this overall map. And I would argue that when there's certain resistances are located close to one another, they tend to form certain resistance cluster. And such a resistance cluster may be considered here for this local consolidation pattern, which is actually developing right now, right? So, but no sooner than we see the pattern break up to the upside through 31,500 or 32,000 points, we may see actually some further upwards acceleration, but only after that happens. If we take it then to, I would argue something that is actually pretty cool tool, to analyze the larger context of the market, then we are truly looking at the RRG, which is relative rotation graph. And the relative rotation graph, ladies and gentlemen, shows you the JDK, which is from the author Julius de Kampner, RS momentum, which is a relative strength momentum, or relative strength ROC, rate of change, okay, versus the horizontal axis for the JDK RS ratio, relative strength ratio, which is benchmarked to the S&P 500, which is there in the very middle and the intersection of the axis. So here we are looking at a potential market rotation, sector rotation, as in here in the green side, you are looking, in the green field, but kind of like transitioning, moving to the weakening field quadrant. We are looking at the
uh, well, I would argue the more defensive side of the market, like a real estate part, or the XLP, which is staples, XLU, which is the utilities, right? This represents a little bit of weakening, right? The relative strength remains strong, as in you see that there is outperformance in terms of relative strength against S&P 500, but the momentum, the rate of change of this outperformance decreases. And when it does, it may be considered an early sign of a reversal. Right, the sensitivity of momentum decline on the ROC for the relative strength tends to actually precede actual price changes and reversals. So there is a sudden weakening seen in the defensive markets. So this is a first promising sign for the aggressive stocks, for the risk on mode, for the offensive stocks as well. And here is what we are seeing on the mirrored side, on the improving quadrant, which tells you that the market is still underperforming against S&P 500 for its relative strength, but the momentum is accelerating, which again may be considered a little bit of more promising, right, for the upwards price action development. You are looking at this potential sector rotation, as in defensive stocks are potentially heading towards the lagging quadrant, while the cyclical stocks such as XLC or XLK, communication services and technology, moving to the leading quadrant or in the direction. However, the tails, right, the tails of those fast 5 weeks performance, are a little bit short. When you compare that, right, when you compare that with, for instance, Bitcoin's shade, Bitcoin's wave tide, tail, no matter how we call that, it tells you the longer the tail, the more momentum change it. The stronger the stronger the trend becomes. So small trends are kind of like risky in terms of the potential reversals. They may kind of like play back and forth, right? However, the sector rotation assumes that if we get stocks moving into the improving quadrant, they are more likely to move to the next following quadrant, which is the leading. And if they move to leading, they might be facing some cool-off period, then moving from the weakening to the lagging. So this is the typical sector rotation. And like I said, it's not confirmed yet. You're not looking at the final move, then transition to the leading quadrant for the risk on assets, and through the proxy of it, because of strong correlation with Bitcoin, you're looking at the potential crypto chances for the upwards price action confirmation development, provided that we see this transition here. So far, Bitcoin is here. It's strongly underperforming in terms of relative strength and in terms of the momentum, right? So we firstly have to flip it. And the communication services, once moved to the leading quadrant, may actually get you some more hook turn, if you will, for Bitcoin as well in the near future. It's a little bit, of course, arguable. Anything I share is not considered financial advice by all means. This is just for educational purposes, and you are responsible for all your money. I have no idea what your strategy is. I have no idea what you do with your money or what your risk preferences are. Some people will prefer to take it safe. The others would love to gamble away all their life savings. Be that's your call, be it whatever that is. However, one of the most important charts there is unquestionably the dollar chart. And this dollar chart actually is a monthly chart. If you look at it, it shows you, first of all, this almost 40-year long trend line, as in 35-year long trend line, which got broken right to the upside in 2015, or I should say earlier in 2014, 2015, getting this breakout to the upside and then moving in this actual rectangle pattern, right? This rectangle pattern is consolidation. This consolidation following a breakout tends to kind of like get you the early confirmation for an upwards development. And then on top of that, we are looking at dollar strength, which is actually pushing through the resistance of 104 points, right? So the dollar index is gaining on power, is gaining on relative performance, and it's gaining on strength. So if we are looking also at the relative rotation graph, here's what I'm saying, right? Here's what I'm saying. Like I said, the dollar here is in the leading quadrant. It's slowing down a little bit against other stocks, against S&P 500. However, it's in the leading quadrant. It's actually the only, perhaps apart from the healthcare, it's actually the only leading element to the puzzle here. So, well, I would argue I would argue that regardless what chart we kind of like have, dollar looks strong. And dollar looking strong in a monthly chart, well, typically brings long-term implications, right? And while the past is never a guarantee of future performance, I would argue that the dollar is pretty strong. And dollar being strong, as in this, secular bull market confirmation that we've got, puts a lot of risk on assets at risk, right? Namely stocks, namely also a little bit of more commodities, as well as cryptocurrencies, right? Because when the currency is gaining on strength, then you're looking at the withdrawal from the market. The market becomes dry in terms of liquidity, which actually supports more to the downside, right? The movements to the downside, because there's very few people to buy that, right? They are not attracted. The risk of situation, the safe haven, the dollar is actually gaining strength. And this also came with euro dollar parity actually being broken down for the first time in 20 years. The dollar actually exceeded euro. This is a historical change, historical phenomenon, which is not really met quite often, right? So, well, another confirmation comes, of course, from this 42-year long trend line being broken to the upside by the 10-year treasury notes, okay? That by the yields, of course, not the bond prices. And the yields at 2.6, some people argue that may double from here, right? As in you've seen in very short period of time a massive, massive increase to the upside, taking you somewhere over the 42-year long trend line, so anchored at a peak of 90.80. It's pretty wild when you think about it, right? And this long-term technical confirmation is actually what aligns well with the directions defined by the monetary policy from the Fed, right? So while speaking of such a I would argue exceptional situation, once in generation, you are looking at situation which is not met, which has not been met for 40 years or more. This is a once in a situation, kind of like a once in a generation situation case. You don't really see that often during your lifetime, right? This is likely a time that we will read about in the books, in the history books. This is what we are going to have and study. This is what people will study in over 40 years from now. So this is actually exceptional situation again as well, because Bitcoin had never been in such a case before. It never actually experienced a full-blown recession, such a high inflation, double-digit, right? Such a strong and aggressive risk coming from the rate hikes and the monetary tightening. So this is a very valid case, very valid test and examination for Bitcoin for its proof of stability, for its proof of working as some form of digital gold, which so far had not been met. Okay, this is interesting. I would argue also because the historical strength comes from the correlation, right? We are at the historically high levels in terms of the Bitcoin's correlation to S&P 500, right, to the large cap stocks on the 7-week basis. What does that tell me? Well, this tells me that if I want to see and expect certain moves from Bitcoin, I firstly need to watch and observe the equity markets, the large caps. Because of this proxy of correlation, whenever the large caps actually bottom out and flatten and move this kind of like a breakout to the upside, most likely, so will Bitcoin, right? This is also why it's very important to catch, early reversal symptoms for the stock market in order to see that potential promising symptoms in the Bitcoin market. It doesn't necessarily, it's not set in stone. It is not said. Nobody writes the rules that Bitcoin may not pump without stocks, or it will always dump when the stocks pump or whatever. However, you get to see the strong correlation at 0.83, with the max ceiling being at 1.0, basically tells you that the correlation between the movements is positive and it's very strong. Okay, positive means that the markets tend to move in the same direction more often than not and very strongly. Okay, so higher chances are that if stocks move up, Bitcoin, it creates an environment on average for Bitcoin to move up. If the stocks keep tanking, right? Imagine in the sense in terms of increasing dollar and at the same time more rate hiking cycle, additions and aggression coming up, this may actually hit back Bitcoin as well, which is why I would be a little bit cautious in terms of catching the bottom for Bitcoin, right? It's, in all honesty, it's a lottery, right? Catching the bottom, I think, is very important to understand that catching the bottom is like winning a lottery. How many times in a row will you win the lottery, right? Once, if you're lucky. But imagine if you try to catch the bottom each and every single time in sequence by trying again and again and again. Your chances are literally microscopic, right? They are very, very small. Or I should say even, nanoscopic or femtosmoking, whatever, whatever that is. What's the most relevant, though, is that you understand that catching the bottom is virtually impossible, right? We do know, however, that Bitcoin likes this kind of like a reversal zone at around 80 to 90%, right? Historically speaking, Bitcoin tends to reverse and revert back upwards, flatten out the bear market depths at 80 to 90% of drawdown of the highs of the peak, right? Which puts us right now in the kind of like a 75% drawdown peak to trough so far at the base of 17,500s. However, this full blown out, 80 to 90% places you somewhere around $10,000. So who knows if there is an exogenous signal, if there is an exogenous factor, right? Like a black swan crash or another virus strain or like an asteroid crashing into for another price shock, which you may never predict. Charts is not going to tell you, Bitcoin chart is not going to tell you when the next crash comes, as in when the next pandemic comes, when there is a Martian attack on the planet Earth. It's never going to tell you when there's like a good time, to refuel your, I don't know, your food reserves, right? In case of nuclear bomb dropping or something like that. The charts are not going to tell you that. Okay. However, you may anticipate something based on empirical probability, which is the statistics of past history. Because if the market tends to move within certain patterns, the self-fulfilling prophecy of the market aspects actually causes the market to behave similarly. While the history doesn't repeat, it often rhymes. So here I would argue, and I would be ready, if in case something like that happens, and in case we of course get to see a breakdown below 7,500s, that the next stop would potentially be somewhere in the area between $10,000 and $14,000. Will we get that? I will be extremely happy if we do, right? If we will, because I'll be there to actually buy the shit out of that. That's what I can promise from my side, and I'm definitely not capitulating. I'm not going to quit. Luckily, before 2022, I had actually been distributing the profits out of crypto for the entire Q4, before the crash happened. Of course, I was caught a little bit off guard because I was never able to predict it. Like I said, when the Evergrande news spilled out, perfect reversal day for Bitcoin, and the stocks, it caught many people off guard. This is unquestionable. Biggest funds are getting liquidated. The biggest crashes are coming to crypto. Let's not forget Terra crash and Luna crash, top 10 project literally liquidating all overnight. 3 Arrow Capital literally going to hell, with the liquidation. So many micro black swans, so much of overspending killed so many businesses. And it does seem to be coming up and aligning with recession. So all those points confirmed, I want you guys to realize that, first of all, you're not alone in that, right? There are many people who would try to help you, who would try to be with you. I'm definitely one of them, right? You won't see me quit. You won't see me stop working. Instead, when the market is kind of like pressing downwards, I'm not fighting it. I'm not fighting the Fed either, right? They say that don't fight the Fed, don't fight the tape. And counter trading what Fed monetary policy becomes, usually brings nothing but losses. So what I would argue that the safest situation is to kind of like let the market relax a bit, let it process and proceed with this capitulation climax, with the selling climax. And when it finally does, I'll be there to buy it. I'll be there to actually just put my portfolio weight, more portfolio weight to cryptocurrencies next to my other assets, which I had got in 2021. Right. So for my understanding, crypto is not a question of 100% all in or 100% all out, that I kind of like do either left side or the right side, and there's nothing in between. Instead, I focus on considering crypto as an asset class, as a one of an many, right? next to real estate, next to cash, next to bonds, next to stocks and commodities, and so on and so forth. This is just a asset class. And if it is, it can work well as diversification tool. So that's my focus, right? And again, I'm not going to tell you what you should do with your money because I don't know who you are on the other side of the screen for your risk preferences. I don't know what your lifestyle is. I don't know if you like what money you have. So I can never be accurate in telling you what to do with your money. That's exactly why I'm not going to do that. However, you should definitely look and read and get a little bit of more depth, in-depth and insights for the portfolio diversification, right? For collecting poorly correlated markets or negatively correlated market asset classes into portfolio to combine for more stability. You would cut a little bit of this risk side. You would cut a little bit of the return side. However, you're going to have a more robust system. And that's exactly what I'm actually doing along with my Barbicator Pro, right? So current time for trailer, that is, that I am looking at right now is exactly the trend following breakout system that I use. It typically has a 30% win rate, but it doesn't mean it's actually working bad. Fun thing is that the trend following breakout systems are proved statistically, hence truly proved to be the best performing systems. The best performing set of rules, the most robust set of rules is trend following breakout systems. They tend to have 30% of a win rate, which means that 7 out of 10 times you're going to get stopped out and chopped in the sideways, just like we had here, right? Sideways, you're going to get chopped because of false breakouts, because this is exactly what this failure, this inability to follow through is exactly what creates a sideways pattern, right? So here, right now, we're looking at the 21,132, the most important resistance for Bitcoin in the entire chart right now. And you're looking at Bitcoin trading at super closely to it, touching it literally very, very close, right? And if I get a clean break and close of a day outside 21,132, I'll be getting a long position. I'll be opening a spot. I'll be putting myself spot long, of course, that I'm saying spot long, technically it's a spot position, simply buy purchase. Long is more for the futures. However, I'm saying that because I'm not going to exclude an option to go futures as well, right? So definitely going to purchase Bitcoin for my position swing, position trade for the next couple of weeks to months, depending on whether or not the breakout is true, real, or not. And despite it has 30% win rate, it means that the 30%, the 3 out of 10 trades that I win on average, they are going to compensate for all of the losses and not very generous profit on top of that. So this is exactly why I keep sticking to my Barbicator Pro setup for current time frame trailer. However, if you're a mean reverter, which is actually good, in the sideways period, right, when the market tends to go flat and it tends to move in a range bound pattern or some triangle coiling, whatever, then it's going to continue with no follow through. It's going to continue back and move back and forth. And that's exactly what supports the mean reverting systems. All that, guys, to say that I truly appreciate your watching. And if you guys have any question, make sure you actually put it in the chats. If you're watching that on YouTube, leave some kind comments, hit the subscribe button, smash the likes, notification bells on, turn it on, because we're going to have so much more coming up free of any charge for you guys. And finally, if you are ready to join for 7 days free, I want to get you guys the free trial, theburbnews.com, sign up free on the upper right corner. And I'm going to get you 7 days free out of any charge. No charge, no credit cards required, no strings attached. If you are serious about your money, if you want to keep digging more and deeper for knowledge, for financial freedom, everybody has the right to chance to get financial freedom. If you want to get closer to it, come and visit me in the Burb Nest, ask me questions, use 24/7 support, 365 days in a year of me, of my team, and I'm going to get you guys what you exactly need, all the tools and resources, high-end materials to get you guys well positioned. I see you guys in the nest, theburbnest.com/free-trial or theburbnest.com free trial upper right corner. Do it and follow the Burb Nest on our Twitter if you guys are curious to learn more. I hope this has been something of an answer for you. God bless you all, guys. I see you around. Stay safe and bye-bye.